Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
In the long run, and I'm sure you're going to have some other ideas there, Samantha, because you're always looking at the other side of the coin just to make sure.
Yes, I am. This is very true. So I have, just to get the macro kind of off my chest, I really am on the other side of that trade, which means big picture, I think this is actually a kind of shot across the bow from China to challenge our US tech dominance. I actually think it's a big honkin' deal. So I'm not so focused on the tech per se or how much they spent. I think that's the noise that distracts from the signal, because we aren't changing the investor appetite for big tech yet, but it definitely created a very big wake-up call for investors. We could see from the 17% drop in NVIDIA that one day, and semis really haven't been doing well for 6 months. But the whole point is we have got, I think, a very big threat that is more economic warfare using this open and free tech, which is the opposite, by the way, of open AI. It's completely closed and for fee. So really, I think they're doing a great job of forcing us to kind of pay attention, us, meaning US, faster, cheaper, better. But I don't think it's necessarily, I think it's spun as very bullish. And of course, I think Mag 7 is going to be in this incredible, powerful position to say, oh, that's just going to make us even more growthier. But I don't trust it. So that's me. I also have been on this bent, and recession risk I've been on since June of last year. I see it for the end of 2025, regardless of who, got elected to president, and it's getting closer and closer, even with all the harried firings or letting go, reduction of headcount and tariffs and all those things. So nothing has changed. So big picture, I think this is a really good time to be in select stocks, good stock picking. Zoom out from the intraday and the overnight headline risk. Absolutely pick themes that are working. We did move from chips to cloud. We still are in a SaaS reacceleration phase with certain names that we've been really pinpointing since October, late September, more mid-October of last year, and they're still working. But I am not at all complacent. I'm looking for yen carry trade unwind part 2. And in fact, I wrote about this a month ago for signs to look for. It was not a risk a month ago. I literally said, be on the lookout. When we start to have yields fall with dollar, with oil, that's the time to start looking for the carry trade unwind for yen moving higher. So all we've had so far is a bounce, right? That well-timed, a bond bounce on January 14th. It's just a bounce. However, we're getting to a point where we're going to get close to inflection point that if yields and oil continue to drop, we're going to get into a risk off deflation impulse, which will be risk off. So I'm always looking at that kind of that hairy edge that we go close to, don't quite fall over, because right now we're clenched, right, in post-election earnings and also escalation, right? I mean, Trump isn't just standing on his laurels here with tariffs. He has followed through with the 10% in addition to the 10% that he did during his first term. So he actually went up 10%, and then the Biden administration never canceled those, and now we're going to go up another 10%. It's still manageable as it relates to currency, which is the yuan devaluation to kind of compensate for that tariff hit. And I've written about this a lot, but I actually think we've turned a big reversal here as it relates to currencies. The loonie, euro, yen, yuan. I think we're going to have what we haven't had, which is FX volatility seeps in to equity volatility. So I wrote about it a month ago because I'm looking for it. Now we're getting closer to the edge. We're not there yet. We haven't gone over the edge. What happens this Friday if, for example, we do get a non-farm payroll that shows a bigger revision than the market is anticipating? In other words, the labor market was weaker than expected. So those who are consensus that the economy has been running very nicely, and that coordinated effort of Biden, Fed, and Yellen, by the way, very coordinated. We don't have that now. we have Trump and Bessent, but not Powell. They're not coordinated. They're not on the same page. So what happens if we get weakness showing up in all of these reports moving forward? It's going to be a different two-way market.
Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.